Hey everyone, I had this idea where I'm going to create a submarket analysis checklist for investors that I'll probably just give away to the people that are within Fortress Federation. Give it away for free. I think it would be a handy tool for people to have in their hands when a deal comes along, and before you really even do a dive into the numbers of the deal itself, and as long as you trust the operating team and whatnot, you can kind of figure out if this market is a good market and whether it's even worth taking a deeper dive into. So I think that's going to be helpful. So on this video, I'm going to make this really quick. I'm just going to kind of keep it to 3 different things. We're going to look at the old 1% rule, which is a rule of thumb in real estate. You want your rent to be at least 1% of the purchase price. Anything above that, it should cash flow well. That's an old good rule of thumb. And also we're going to look at price per door of this particular deal, Aspire. That's a deal that we're doing right now, and how it compares to the average median household price in the submarket and surrounding neighborhood to show, if they have better options out there, if they could actually afford to buy a house as opposed to having to rent. And then there's a third thing I want to do, and I believe that's, the affordability ratio. You just want to make sure that your tenants can afford the rent. An average affordability ratio is 3-to-1. So in other words, your mortgage, if you're getting qualified for a home, your mortgage can't be any more than 33% of your total income. So let's do this quickly. First, we'll start with the old 1% rule. So we know, if you look down here, the price per door we're getting is we'll just call it $76,000 per unit. So look up here just above there, the rent we're charging is $940. So pretty simple. You just divide 940 divided by 76,000, and that is about 1.24%. So that's solid. I'll do that. That's just one of the first little quick metrics. I'll say, okay, all right, we're going to cash flow well on this property. Check that off. The next thing I talked about was just the price per door here, $76,000 per unit as compared to the median household price. We know in this surrounding market, the average household price is $242,000. Seems pretty reasonable to us. That's pretty inexpensive depending on where you live in the country. But still, $242,000 is 3 times what the per unit cost is. So most people aren't going to be able to make that jump. Not to mention they're going to have to come up with a $48,000 payment. That's 20% of $242,000. So it's not likely that we're competing with housing opportunities around the surrounding area. These people, it's much more affordable for them to rent, and that's the beauty of affordable housing. It provides housing for everyone. And then the third and final thing, the affordability ratio, pretty simple. We know, I talked about it can't be any greater than 33%. Well, this is one of the things I really liked about this deal, because we know after doing our due diligence, the average median income, our average median household income for the property is $48,000. So all we have to do is just take that $48,000 divided by 12 months to annualize it. So on a monthly basis, that's $4,000 income, right? So you just divide that by 940, and you have an affordability ratio of 4.25. So they have plenty of disposable income for other things outside of just housing. The roof over their head, plenty of money for food, plenty of money for other things. So that's another thing I look at. Make sure that if you're doing some sort of CapEx plan where you're renovating and you do have to raise the rents, we're actually not raising the rents in this particular deal, which makes it really low risk. But if we were, you just want to make sure that the tenants can afford the rent and it's not going to burden them too much. So that's 3 things. I'm going to do, a pretty healthy checklist that I'm probably going to just create a PDF or an Excel spreadsheet that people can have. So look forward to that. But I hope that helps. All right. Talk soon.